Hi everyone, let's go through my preferred medium time frame and the 4 low time frame scenarios. Starting with the medium time frame where I'm looking for a 1, 2, 3, 4 and then a final leg to the upside for wave 5, after which we expect some downside to come. If we then zoom in to this final leg of wave 5, I'm thinking about an extended wave 1 impulsive structure, which means that this wave 1 is extended and not wave 3. In this scenario, wave 2, the most common target for wave 2 is between the 0.236 and the 0.382, which has been very well respected before then upside in this wave 3, which doesn't have a target, so this is absolutely fine. This wave 4, most common target, if wave 1 is extended, is in between the 236 and the 382, which again has been very well respected. And we are now up in the final move to the upside for then finishing wave 5 somewhere inside this target area between the 0.618 and the 0.786, which is basically between 28.9k and 30.5k. Now these fibs over here are pulled from the low of wave 4 to the high of the blue one to the low of wave 2 with the trend-based fib extension. And if we then zoom into the lower time frame scenarios, there's basically 4 scenarios that I like to show you, with the final 2 being the most likely scenarios. And starting with, for me, the most, well, almost the most unlikely scenario, because the longer we wait, the more it's ranging, and the more videos I make, the less likely this scenario is becoming, guys. Like wave 1 is over here, wave 2 on the high time frame is already finished. First of all, this wave 2 is extremely short. This wave 2 is only 23% of the time it took to form wave 1, and usually wave 2 takes at least 38% of the time it took wave 1. So this is already pretty unlikely. And then if we look at the impulse, it's not a very clean impulsive structure as well, because in this scenario we're looking at a 1-2, 1-2, and then we now expect a big 3 to the upside, pushing through all the resistance levels. However, as you can see, volume not really on our side. We're also ranging for ages, and we want to see the big bang to the upside. Also, this wave 2 over here did not hit the 382 fib, which already is a rare target for a wave 2, and not even hitting this target is extremely rare. Then we have a blue wave 1 and a blue wave 2, with this wave 2 over here being a sideways structure. Usually a wave 2 is a zigzag structure, which is a 535, but this is a WXY, so that is a little bit more rare but not impossible. But what is bugging me more is that this wave 2 again only hit the 382 fib. So we have a rare occasion, well actually we have 3 rare occasions. Wave 2 is very short. This wave 2 basically missed out on hitting the 382, and this wave 2 is hitting the rare target of the 382. So yeah, it's basically rare upon rare upon rare, which makes the whole scenario basically very unlikely. Then we go to the scenario I already explained on the basically the medium time frame, but now this scenario is already finished. So now this wave 5 over here, the green wave 5, is in with a 5-wave structure at the end, and we're basically looking for a lot more downside. The reason that for me this is currently not the most likely scenario has to do with the CVD, which basically means absorption. So what you want to see on this chart, this is the CVD chart, is basically this is price and this is the CVD, and what this represents is the people buying or selling. So if people are selling, market selling, then the line goes down. If people are market buying, the line goes up. And what you want to see, especially when there are certain reversal areas, like over here we're inside this white box for a potential reversal area to the downside, what you preferably want to see is price making a high, retracing to the downside, and then when it is pushing to the upside once again, it should make a lower high in price but a higher high in the CVD line, which means that price is making a lower high even though more people are buying over here than they did at the top. And that means that a very big position is filling their shorts with the market buy orders from probably the retail traders, and therefore the bigger position is absorbing all those longs to then trade it to the downside. And at the moment we do not see any bearish CVD on the chart. Of course, wave 5 for me at least is in if we are going to take these lows over here, because if price is going to take these lows, I do think we have more downside to come. Because if we look at the support areas, yeah, the first target box that I have is at 24.85k. So in my opinion, once we go below these wicks over here, there's simply not much support holding price from reaching this 24.8k level basically. So yeah, Then the second last scenario I like to show you is that wave 5 is not yet finished. So over here we again have the medium time frame scenario on the chart, as well as then this final leg 5. So actually this is quite messy. Let's do it like this. So we are still looking for a little bit of upside. In this scenario, it's an ending diagonal type of structure where again wave 4 finished over here and we are looking for wave 5 to end somewhere over here. In this scenario, this is a wave 1, looking for a 2, then a 3, 4, 5. So it's like an ending diagonal shaped wave 5. Now in this scenario, the reason that I potentially have a wave Y to the downside is because if we go to the, let's say, 30-minute chart, we have a zigzag over here, a 5-3-5 structure in a W, but then we have a 3-wave structure over here. And yeah, this 3-wave over here looks like then an A. Then we have a B, which reached the expanded flat targets between the 1.382 and the 1.236, also in confluence with the golden pocket, by the way. And then this is an impulsive structure to the upside for a wave X, which can be a 1, 2, maybe a 3, 4 right now, currently maybe in a wave 4, 5, and then going to the downside or already to the downside as we hit the target over here for this wave X. And then we are looking for a wave Y, which then is taking this wick at least, if not hitting the target box that I have over here, with the target box being between 27.162 and 26.9K, which has a little bit of support with a daily naked point of control, the point of control of this range over here as well. So it's a little bit of a support area that price could hit before eventually more upside. Is this preferred? Would I really like to see price going below these lows? I do not have anything against it as long as it doesn't go below these lows. So at the moment we are already, of course, at the high of this whole range that we had over the past couple of days as well. And longs over here, in my opinion, are not really recommended, but of course no trading advice here. You do you. But we're at the high of the range, a potential reversal area for lows. The bullish scenario is not looking that likely. The only way you could potentially trade it to the upside is catching these type of lows over here. But of course, it is still relatively risky, but we are still in bullish market structure. But yeah, also currently, when we look at the CVD, we do have some bullish CVD. So between this little range, or at least, yeah, this little range over here, we made a CVD low on the yellow line that you can see. And now what price did is it made a higher low, but this yellow line over here, the CVD, is actually lower than the CVD at this level. As you can see now with my pointer, if you look at the dots of the pointer, then currently the low over here of the CVD is higher than the low of the CVD over here. So there's a little bit of bullish divergence as well, and I would prefer to already go up and take these highs instead of then coming down once more and then up again. If we do come down once more, I also want to see the CVD coming down even further to create more bullish divergences to then go to the upside, because I do think it would be nice to go up at least once more, because we also have some confluence over here, which is inside the wave 5 target area as well, which is the weekly naked point of control and a weekly level. And it would be really nice to hit these levels as well for some additional confluence for then the potential short scenario to the downside as well. And then the final scenario that I like to show you over here is that this is still an impulsive structure. So wave 4 finished here, looking for this wave 5 to end, and this is a wave 1, 2, 3, 4, 5. Or this is 1, 2, 3, 4, 5. That is also possible if you change the numbers a little bit. Wave 4 did go pretty deep though. It went to like the golden pocket area. However, not invalidated, because the invalidation, if this would be a wave 1, is entering the price action of this wave 1, which is at 27.333, and it didn't do that. However, we did close many candles below the 0.5, which is not really something you like to see. And if I move it a little bit more down to the lowest low, we still over here close some candles below the 0.5. So yeah, this is not ideal, but in general, I'm still looking for a little bit more upside. Of course, the moment we take these lows, that is going to be invalidated. I don't really care how we're going to create more upside if we do, of course. This diagonal is looking pretty nice. But we do already have bullish divergences between this low over here and this one over here, and there's then also quite a chance we're going to take this high, but also this being a WXY looks very likely. So honestly, as you know, or probably here, I don't necessarily have too much of a preferred scenario between this one where we go up for 5 already, or this one where we dip once more to the downside and then up. In general, my feeling is to go a little bit higher, reach the higher levels inside the medium time frame wave 5 target area. That being said, I hope this video was still helpful or valuable to you. I'd like to thank you for watching and subscribing, and I see you at the next one. Bye bye.